and whenever market stays above the gap without completely filling the gap, then the pattern would be considered as a bullish runaway gap. This is exactly happening on the daily chart, where after a formation of 4 sessions of this gap on 2nd of February, the gap is remains intact. As long as it remains intact for the next 1 or 2 sessions, this gap could be considered as a bullish runaway gap. And friends, technically, this the main features of the bullish runaway gap is that key. Normally, these kind of gaps are more often formed during the middle of a uptrend. So do we consider this as a beginning of a uptrend, or we are in the middle of a uptrend? The time will tell. But there are certain early indications that market is showing some kind of a pattern that indicates that we are likely to see a decisive up move from here onwards once gap remains unfilled, at least for next 1 or 2 sessions. And we'll go to the next weekly chart, friends. What we can observe a weekly chart, a sharp downward corrections last 1 month, and after that a significant bounce back from the lower levels, from the lows of around 24,500, 24,450. And market has almost retested the crucial hurdle of around 26,350 levels in a 1 week's volatility. Market has showed its intention very much clear that there is a strength on the upside, though market is showing some kind of consolidation, because the area of the hurdle around 26,300, 350, what it is shown in the weekly chart is very strong hurdle. We have seen couple of reversal from the higher levels, 2-3 times market hit the hurdle of around 26,300, 350 level, reversed down from the highs. So that means that makes certain significance of the resistance. From that resistance only on the 2nd of February, when the market bounced back, opened a 1,000 points gap up, hit the hurdle and came down. Currently showing a support. It looks like market is in a strong uptrend. So positional support is no doubt about 24,570, and the immediate hurdle in this previous slide, what we have mentioned, is 25,800 level. 25,800 is the area of the consolidation moment that has happened over the last through 2-3 sessions, and that it seems acting as a hurdle for the market. And friends, this is a monthly chart, not to tell about monthly. Over the last couple of months, we have seen consolidation moment. On the monthly chart, we have seen downward correction in a smaller phase, the healthy in the during uptrended market, because in the smaller time frame, we may be facing a sharp decline, but as per the longer time frame, market remains intact, the uptrend remains intact. The current decline or a consolidation seems to have taken support around 20-month EMA, which is a green line. And previously also we can see the whenever the 20-month EMA has retested, the market has bounced back meaningfully from the lower levels. 1, 2, 3 option over the last couple of years. 2-3 times market has taken support of 20-month EMA and bounced back very well. This month also market came down to nearer to the at 20-month EMA, somewhere around 24,500 odd levels, and recovered very well from the lows. That indicates, as happened in the past, there is a higher possibility that we could see some meaningful bounces from the lower level. Bounce has already started, showing consolidation. The post-consolidation market is likely to move up. So what is Bank Nifty suggesting? Bank Nifty, in fact, outperforming the Nifty over the last few weeks. What we can observe on the weekly chart is a narrow range movement around within the 60,500 to 58,000. This 2,500 points market, this Bank Nifty has been hovering. 1 day of up move, 1 week of down move, 1 week of up move. That kind of a pattern was forming. And last week, decisive breakout of this moment of this range is indicating there is a higher possibility of range breakout. And friends, technically, whatever the underlying moves above the larger consolidation pattern, it creates the momentum to move into the similar kind of a highs. Right, how the 2,500 range it has taken during this period, there is a higher possibility once it breaks out, that kind of a upside we could see in the banking sector over the period of time. That is as a target of this horizontal band theory. So no doubt, weekly time frame is very much intact. We are in the consolidation mode in Bank Nifty. There is a higher possibility that Bank Nifty is likely to break above 60,800 levels, and we could see Bank Nifty moving towards the recent high, 2nd February high of 61,760. So the broader markets were underperforming the benchmark. We have seen some sharp declines in the broader markets like mid cap and small cap. What are they indicating? The weekly chart of mid-cap is suggesting a formation of bullish morning star pattern. Friends, Morningstar in technical terms is a bottom reversal pattern. It's a three candle pattern. One candle is the long range bear candle. After that, a high volatility at the lower levels. And third candle is a big bounce back, which has almost reached the high of that previous one, first one, bear candle. This is exactly happened with the mid cap on the weekly chart. We have seen some long bear candles previous weeks, and last week we have seen consolidation moment, and this week we have seen some significant bounce back in the mid cap weekly chart. This is indicating a important bottom reversal pattern. That means more upside is likely in the near term. So one can look for bottom fishing in selective mid cap stocks over the period of time. The small cap, the same story intact, little bit laggard to the mid cap, but the story remains intact. We have seen after a doji kind of a formation, we have seen a significant bounces in the small cap as well. This also considered as a bullish reversal pattern, not that morning star, but bullish reversal pattern that indicates a more upside is likely for this small cap towards the downsloping resistance. So near-term downward bottom reversal indicates the selective probability of selective small cap stocks could outperform the benchmark over the period of time. So what has happened in the union budget, friends? We have seen the union budget has been presented. Market has been volatile, declined sharply, later bounce back. But if you look at last 10 years union budget at a glance, this is the pattern. This is the market action. What has happened after the budget? This is the monthly chart. The previous union budget of the last 10 years is indicating a significant moment. Green dotted lines are the dates or the months when the union budget has been presented in the particular year, and the red lines, couple of lines, were the interim union budget, which is after the new government formation. So most of the time, what we can observe is a trend continuation pattern. Most of the time, a uptrend continuation pattern, one or two times downward continuation, and sometimes we have seen some reversal pattern. So what is currently when the union budget has been presented on 1st of February, at that time market was in a downward correction, made a new low during the budget day around the budget day. We have made the low of around 24,500, 600 levels. And after the presentation of that budget, as happened in the past, as per the previous outlook, there is a higher possibility of the formation of reversal pattern as happened in the past couple of times after the budget, and we could see Nifty forming a bottom reversal. Seems like the 24,600 formed a bottom reversal, and this further upside could confirm the significant reversal in the market. So on that, as per the analysis of the previous budgets, there is a higher possibility of Nifty moving up further. And this is the historical charts of RBI mid-quarter policy rates. Recently on Friday, we have seen RBI coming out with a status quo on the economic front and in the rate in this thing era, and has not cut the remains the intact. They have said the remains that rate is intact and there is no change in the policy rates. The previously we have seen last 2-3 years, many times RBI has taken this stance, and sometimes they have made rate cuts, they have made a rate increase, they have made most of the times they made a status quo. During that, market was volatile, very much volatile over the period of time. Last 7, 8, 10 occasions I have presented in the chart what has happened. The most of the period of time market has reversed its trend. If the daily chart is indicating whenever the market was in a downtrend, after the presentation of the budget, market has reversed its trend. If the market was in an uptrend, some of the occasions that the market has reversed its uptrend and came down. But most of the occasions, whenever the last 2-3 years, most of the times, whenever the market was in a downtrend, it has made a bottom reversal after that announcement of RBI policy, and market moved up. This is another indication that there is a possibility of chances of market bouncing back, as we have seen some decline from the higher levels 26,300 to around 25,500 odd levels on Friday. And on the announcement of this RBI status quo, there is a possibility of some bounce back in the market. So the friends, is the conclusion. The market has witnessed a massive volatility on the back of key events like union budget, India-US trade deal announcement, and RBI policy outcome in the last 1 week. After a steep decline and decisive breakout this week, Nifty has bounced back smartly from on the on Friday and from the lower levels and closed higher. The underlying trend remains positive for the market. A decisive move above the immediate hurdle of around 25,800 could possibly bring bulls back into action, and that could push Nifty towards the upside targets of around 26,000, which is the mid part of the long bear candle that formed on the 2nd of February. And the next hurdle is 26,350. That is the second target, where one may expect a major hurdle as over the last 1 year, as many times market has reversed from that hurdle. That is going to be the second target. However, the weakness from here could find support around 25,500 levels, the low of Friday, and the next support is around 25,100 levels. The long-term charts of monthly remains positive. The present consolidation weakness, as per the long-term time frame, is going to be a buying opportunity. The underlying trend of Bank Nifty remains positive, currently showing choppy trend. The overall near-term chart pattern is positive. A decisive breakout of immediate resistance around 60,800 is likely to open the upside target of around 61,760 in the near term. Immediate support is placed 59,600. The worst periods for the broad market indices seems to be over. Friends, we have seen some significant sharp declines in the mid cap and small cap stocks during the consolidation phase in the market. The recent formation of important bottom reversal in the mid cap as well as small cap on the weekly chart indicates this could likely to bring a cheers to the mid cap and small cap segments in the coming week. So one may look for some bottom fishing in the selective mid and small cap segments ahead. Sectorally, banking, energy, metal, infra, realty, FMCG, consumer durables, and PSCs are looking very attractive, are likely to outperform in the near term, while IT and pharma are expected to consolidate further before the bounce back. So friends, this is the presentation what discussed about that, and now I would like to invite my colleague Nandish to give the presentation.
Yes, Nagaraj, thank you. Thank you for the wonderful presentation. Am I audible?
Oh, you're audible.
Okay, let me share my screen.
Yes. Nandish, your screen is visible.
Is it visible?
Make it, yes, yeah.
Nagaraj, is my screen visible?
Yes, Nandish, you can go ahead. Your screen is visible.
Nagaraj?
Yes, Nandish, your screen is visible.
Nagaraj, is my screen visible?
Yes, I can look your screen. It is visible, very much visible. It's a clear.
Yes, it is visible. Yes.
Hello.
Yes, it is. Yes.
Nagaraj, my screen visible?
Yes, Nandish, your screen is visible.
Okay.
Yeah. Make it in a presentable mode. Yeah.
Yes.
Yeah, it is visible. You can go ahead.
Oh, okay. So good morning, friends, again. So let's straight away jump to the FNO side, what the data is suggesting. So as Nagaraj explained, it was a highly volatile week with lot of events. And during this week, this is the extended week. If you consider Sunday in this week, the budget day, during this week, we have seen 11% fall in the open interest in the Nifty futures, accompanied by a 1.47% rise in the Nifty. So that indicates short covering. So basically, market corrected sharply on the budget day, and then because of trade deal with US, market rises sharply. And during this sharp gain, we have seen short covering in the Nifty. On the other hand, we have seen long build up in the Bank Nifty futures. We have seen 8% rise in the open interest in the Bank Nifty with 0.86% rise in the Bank Nifty. So basically, on the one hand, we have seen short covering in the Nifty, while on the other hand, we have seen long build up in the Bank Nifty futures. Coming to option data, Nifty open interest put call ratio rose to 0.96 levels from 0.90 levels last week. And this rise in put call ratio is mainly on the back of aggressive put writing at 25,500, 25,600 levels. This put writing suggests that 25,500 level is likely to act as a very strong support in the coming days. So 25,500 as of now stands as a strong support. Now coming to resistance side, we have seen call writing at 25,800 levels. So the immediate resistance is seen in the vicinity of 25,800, 25,900 levels. But if Nifty manages to close about 25,900, then we see the Nifty going to 26,300, 26,400 level, where we have seen call writing. So as you can see from this option distribution chart, we have seen aggressive put writing at 25,800 levels. So aggressive put writing at 25,500 levels. So this is going to act as a strong support for the coming week. On the other side, immediate we have seen call writing at 25,800. So 25,800, 900 is likely to act as an immediate resistance, followed by 26,000 is an important resistance, and then 26,300, 400 levels. So on the other side, 25,900 you can say is an important resistance. Once we cross that, we might see an aggressive short covering, as there are aggressive call letters at 26,000 levels. And once we cross 25,900, we might see a short covering, which might push Nifty to 26,300, 400 levels. Coming to FI side, so this is the very important figure to track. As we all know, since last one year or so, FIs are aggressively short in market in index future, and they are not covering short. But yes, during the last week, we have seen first sign of short covering by them. FIs net bought worth rupees 7,395 crore during this week, with their open risk going down by 18,000 contracts. So basically, they have started covering their short. And if you were to see breakup, out of this 7,395 crore, they have covered their short in Nifty future worth rupees 5,784 crore. So majority of their shorts were covered in Nifty, while they have created long build up in Bank Nifty, but that figure is not that large. So you can say that broadly they have covered their shorts in Nifty, while minor long build up in the Bank Nifty futures. Their long to short ratio in the index future rose to 0.22 levels from 0.14 levels to reach a 2-month high. So FIs have started covering their shorts, and that's why their long to short ratio has started moving up. So though their ratio has moved up to 0.22 from 0.14 levels, still out of the total positions, 82% are on short side. So still many FIs are aggressively short in our Indian markets, particularly in Nifty futures. So we believe that if market were to continue their uptrend, global markets are strong, we might see a short covering by FIs in the days to come. We can see a more short covering by FIs. So as you can see from this FIs long to short ratio chart, their long to short ratio was hovering around 0.13, 0.15 levels for a long time. Now it moved up sharply to 0.23 levels. Earlier we have seen that level on 1st December. So FI's long to short ratio has moved up sharply to 2-month high. So that suggests that FIs have started covering short, and we might see a more of a short covering in the days to come. So coming to outlook, as we have seen, short covering the Nifty futures, rise in put call ratio, put tightening at 25,500, 600 levels, first sign of short covering by FIs in the index future segment. And moreover, they're buying in cash market. After a long time, FIs have started buying in cash segment also. And also strong global Q. So all this indicator indicates that one should remain optimistic. We are going to, Nifty is going to go higher. One can keep 25,500 as a trailing stop loss. With that stop loss, one can remain long. On the other side, as we discussed earlier, there is an immediate resistance placed around 25,800, 25,900 levels. But once we cross 25,900 level, we might see a aggressive short covering from FIs and also from traders side. And that might push Nifty to next resistance of 26,300, 500 levels. So overall, our view on the Nifty remains bullish. 2,500 is a stop loss, and we are expecting Nifty to move higher in the coming days. Coming to Bank Nifty, we have seen long build up. We have seen put writing at 59,000 to 60,000 levels, and also long build up by FIs in the Bank Nifty futures and buying in cash segment. All these indicators indicate that Bank Nifty is looking strong. Few days back, Bank Nifty closed at all-time high on a daily basis. So Bank Nifty remains more strong as compared to Nifty. Therefore, for Bank Nifty, our advice to create long with stop loss of 59,500. Immediate resistance placed around 60,800 to 61,000 levels, where we have seen call writing. Once we cross 61,000 level, we might see again more short covering Bank Nifty, which could push Bank Nifty to 61,700 to 62,000 levels. So both for Nifty and Bank Nifty, our view remains bullish. Bank Nifty keep a stop loss of 59,500 and Nifty keep a stop loss of 25,500. Now coming to sectors. So during this week, we have seen long build up in many sectors. As you can see from this chart, we have seen long build up in auto. We have seen long build up in FMCG. We have seen long build up in the new age stocks, oil and gas stocks, power stocks. So there are a whole host of sectors where we have seen long build up. Technologies is the only sector where we have seen short build up. Otherwise, most of the sectors have seen long build up, and among all the sectors, auto, FMCG, new age, oil and gas and power. This stands out. These are looking good. So this is all I need to share from FNO side, Nagraj. You can go ahead.
Yeah. Yes. Thank you, Nandish. Thank you for your insights on as per derivative. So friends, this is the presentation on technicals and derivatives. Now we'll move into a last phase where we can try to answer your queries. If you have any queries, except the stock queries, as per the compliance, we won't be able to discuss on the stocks. You can ask about the sectors and any other queries. You can post here in the chat box your question and answer. We are happy to answer your questions. Nandish, yeah,
Yes, Nagraj.
before the audience ask the questions, there is one doubt in my mind. Recently, we have seen a sharp decline in IT sector. What do you think, um, technically or on the derivative basis, how the IT sector is placed? The same question is coming. Where is the support for the IT sector? What do you think?
So there are we have seen this time we have seen short build-up in IT, aggressive short build-up, and that short build-up is not only limited to mid-cap IT stocks. That short build-up was also there in the large-cap IT stocks, in likes of heavyweight stocks. As you all know, there are 3, 4 heavyweight stocks in IT, and all the stocks witness short build-up. So I think that this underperformance from IT might continue because apart from short build-up, we have seen breakdown in many IT stocks also technically also. So I believe that market may move up. IT, we might see some short covering in few IT stocks, but overall they will underperform because data suggests that this IT stocks is likely to underperform for the coming days. And after a few days, we need to basically look at whether we are seeing a short covering or not. But as we stands today, it seems that there are aggressive short build-up in IT, and it's IT sector is likely to underperform during the for the coming days.
Okay, rightly said, Nandish. Looks like chartically IT is weak and we could see more weakness or consolidation. So one question from Harsh Gupta is asking defense sectors or defense stocks. We won't be Harsh, we won't be able to discuss about the stocks, but defense sector is in a downtrend. We have seen sharp declines in the prominent defense names recently. Result season is going on. And I think this sector is likely to consolidate further. There is no clear sign of a bottom reversal for the defense sector and most of the prominent defense stocks as of now. As and when the this sector forms a bottom reversal, we will intimate with the issuance of the MTF calls or a derivative in a derivative segments. You will come to know. Right now, better to wait for the defense sector to initiate or as participants to initiate the long trade in it. How you see hospitality industry? Hospitality industries, we have seen some sharp decline, showing some consolidation moment. I don't think there is a much decline is there in the hospitality. We could see this sector bouncing back after forming a bottom reversal. And one more questions, Nandish from Ayaz. After the AI bubble in US, which also affected the Indian market, is this time we can accumulate IT stocks? I think, Nandish, we have already answered for these questions.
Yes.
That currently IT sector is looking weak and one may wait for some consolidation to happen or wait for some reversal to happen at the lower levels. Then one can look for initiate longs in the IT stocks. Ranjit Stellan is asking how you see commodities like silver and gold. And I think silver and gold is completely showing as per the geopolitical movement. And now we are last 2-3 session, we are seeing a sharp declines. Better to wait for things to clear out at the dust to clear at the lower levels. There is a high volatile sector. It is very difficult to predict. Totally depends on the geopolitical moments. On that basis, the precious metals are behaving on Indian markets. Better to wait for some more times for a clarity. Once it forms some bottom reversal, then one may look for a longs in this precious metal. Till then, wait. Audience, and do you have any questions, any other questions regarding the sectors? Please quote in a chat box. Rohit is asking what is the view on automobile and chemical sector. Do you have any insight on this, Nandish?
Yes, Naira.
Automobile and
So
chemical, yeah.
yes, Naira. So as we explained earlier, auto is a sector where we've seen long build-up, and if you and if you, I mean, and there are large cap stocks like um, Hiromoto, Maruti, Ashok Leyland, all these have witnessed long build-up. Moreover, technically also all the auto stocks and auto index is placed on on a stronger note. So yes, auto stocks and auto ancillary stocks can do well from here on. Technically also they are well placed, and from FNO side also this suggests that auto sector can continue to outperform auto along with auto ancillary stocks.
Yes. And one more, Girish is asking about what about the gold and silver ETF? I think we have already answered regarding these precious metals currently in a turbulence time and showing sharp declines from the higher levels and totally depend on the geopolitical events. So that facing out for the precious metals, better to wait for some more time for the clarity. And one more question is coming, how FMCG is looking after the budget. Rightly said, FMCG charts are improving. We have seen underperformance in FMCG on Friday. We have seen some good bounce back. Looks like a bottom reversal formation for FMCG sector itself and prominent stocks also. So one can look to look for a FMCG for creating longs for the short term. Srinivas is asking what is the view on small and micro cap stocks? Yes, we have discussed in a presentation. Small cap, mid cap showing signs of a reversal. We have seen important bottom formations on the weekly charts in the mid and small cap segments. There is a possibility that these sectors is likely to under outperform in the near term compared to the Nifty. So the assigned time is seems to be over. I think, Nandish, we would conclude this webinar. Thank you, friends. Thank you, everyone, for joining this webinar. And thank you, Nandish. And we can disconnect from here onwards. Thanks a lot.
Yes, okay. Thank you all for joining. Have a nice weekend.